What if you could invest like a billionaire without needing billions to start? In today's video, we're unlocking the secrets behind Warren Buffett's legendary investment strategies. Nicknamed the Oracle of Omaha, Buffett didn't just build a fortune. He built a philosophy, one rooted in patience, precision, and an unshakable belief in understanding what you own. We're not here to throw jargon at you or regurgitate Wall Street buzzwords. Instead, we'll break down Buffett's most powerful principles, like value investing, long-term thinking, and the magic of compounding, into clear, actionable steps you can actually use. Whether you're a first-time investor or looking to sharpen your portfolio game, this video is your roadmap to building real wealth with timeless strategies. By the end, you won't just know how Warren Buffett invests, you'll be ready to think like him. So grab a notebook, hit that subscribe button, and let's dive into the mindset that's made billions. Your journey to smarter investing starts now. Understanding Warren Buffett's investment philosophy. Warren Buffett's investment philosophy is built on a foundation of core principles that have guided his remarkable success in the financial world. At the heart of his approach is the concept of value investing, which involves identifying undervalued companies with strong fundamentals. Buffett believes that by purchasing stocks at a price lower than their intrinsic value, investors can achieve significant returns over time. This strategy requires a keen eye for detail and a willingness to conduct thorough research, making it essential for anyone looking to emulate his success. Another critical aspect of Buffett's philosophy is the importance of long-term thinking. Unlike many investors who chase short-term gains, Buffett advocates for a buy-and-hold strategy. He emphasizes that true wealth is built over time, and the power of compounding can turn small investments into substantial fortunes. By focusing on the long-term potential of a business, rather than its immediate fluctuations, investors can ride out market volatility and benefit from sustained growth. Buffett also stresses the significance of understanding the businesses in which you invest. He famously states that investors should only buy stocks in companies they can comprehend. This principle encourages investors to conduct thorough due diligence, analyzing a company's financial health, competitive advantages, and market position. By understanding the underlying business, investors can make informed decisions and avoid the pitfalls of speculation. Finally, patience and discipline are cornerstones of Buffett's investment philosophy. He often reminds investors that the stock market is a device for transferring money from the impatient to the patient. This mindset is crucial for wealth creation, as it allows investors to stay the course during market downturns and resist the temptation to make impulsive decisions. By embodying these principles, aspiring investors can cultivate a mindset that aligns with Buffett's successful approach, paving the way for their own financial success. Key strategies for successful investing. When it comes to successful investing, Warren Buffett has laid out a roadmap that aspiring investors can follow. One of his key strategies is the concept of buying undervalued stocks and holding them for the long term. Buffett looks for companies that are trading below their intrinsic value, meaning their stock price does not reflect their true worth based on fundamentals. By purchasing these undervalued stocks, investors can position themselves for significant gains as the market eventually recognizes the company's true potential. This strategy emphasizes the importance of patience, as it may take time for the market to correct itself. Another essential strategy in Buffett's playbook is diversification and risk management. While he often advocates for concentrated investments in a few well-understood companies, he also recognizes the need for a balanced portfolio. Diversification helps mitigate risk by spreading investments across various sectors and asset classes. This way, if one investment underperforms, others may compensate for those losses. Buffett encourages investors to understand their risk tolerance and to build a portfolio that aligns with their financial goals while minimizing exposure to potential downturns. Continuous learning and staying informed about market trends are also vital components of Buffett's investment strategy. He is known for his voracious reading habits, often spending hours each day consuming financial news, reports, and books. This commitment to learning allows him to make informed decisions and adapt to changing market conditions. For aspiring investors, this means dedicating time to educate themselves about the companies they invest in, as well as broader economic trends that could impact their portfolios. By staying informed, investors can seize opportunities and make strategic adjustments when necessary. By applying these key strategies, buying undervalued stocks for the long term, diversifying to manage risk, and committing to continuous learning, investors can enhance their chances of achieving financial success, just like Warren Buffett. Real-life examples of Buffett's investments. Warren Buffett's investment journey is filled with remarkable case studies that illustrate his principles in action. Two standout examples are his investments in Coca-Cola and Apple, both of which have yielded impressive returns and valuable lessons for aspiring investors. Buffett first invested in Coca-Cola in 1988, purchasing a significant stake in the company for around $1.3 billion. At the time, he recognized Coca-Cola's strong brand, global reach, and consistent demand for its products. His long-term vision paid off handsomely. Over the years, Coca-Cola's stock price soared, and the company became a cornerstone of Buffett's portfolio. This investment exemplifies the power of buying a strong, well-managed company and holding it for the long haul. The lesson here is clear. Look for businesses with enduring competitive advantages and a solid track record of performance. Another notable investment is Buffett's stake in Apple, which he began acquiring in 2016. Initially skeptical about technology stocks, Buffett was drawn to Apple due to its strong brand loyalty, innovative products, and robust ecosystem. His investment has since grown exponentially, making Apple one of the largest holdings in Berkshire Hathaway's portfolio. This case highlights the importance of adapting to changing market dynamics and recognizing the potential of companies that may not fit traditional molds. The key takeaway is to remain open-minded and willing to reassess your investment criteria as new opportunities arise. These real-life examples serve as a reminder for viewers to analyze successful companies for potential investment. By studying the strategies and outcomes of Buffett's investments, you can gain insights into what makes a company a worthy addition to your portfolio. Look for businesses with strong fundamentals, competitive advantages, and the potential for long-term growth. By applying these lessons, you can enhance your investment strategy and work toward achieving your financial goals. Building your own investment strategy. Creating a personalized investment strategy inspired by Warren Buffett can be a rewarding journey toward financial success. The first step in this process is to assess your financial goals and risk tolerance. Take some time to reflect on what you want to achieve with your investments. Are you saving for retirement, a major purchase, or simply looking to grow your wealth? Understanding your objectives will help you determine the appropriate investment horizon and the level of risk you are willing to take. Remember, investing is not a one-size-fits-all approach. It should align with your unique financial situation and aspirations. Once you have a clear understanding of your goals and risk tolerance, the next step is to create a watch list of potential investments based on Buffett's criteria. Look for companies with strong fundamentals, competitive advantages, and a history of consistent performance. Consider factors such as management quality, market position, and financial health. By focusing on businesses that meet these criteria, you can build a portfolio that reflects Buffett's value investing philosophy. Additionally, keep an eye on market trends and economic indicators that may impact your chosen companies. Finally, it's crucial to emphasize the importance of regular portfolio reviews and adjustments. The investment landscape is constantly changing, and what may have been a solid investment yesterday might not hold the same potential today. Schedule periodic reviews of your portfolio to assess the performance of your investments and ensure they still align with your financial goals. Be prepared to make adjustments as needed, whether that means selling underperforming stocks or reallocating funds to new opportunities. By following these steps, assessing your financial goals, creating a watch list based on Buffett's criteria, and conducting regular portfolio reviews, you can develop a personalized investment strategy that not only reflects your values, but also positions you for long-term success in the market. As we wrap up our exploration of mastering investment strategies inspired by Warren Buffett, let's recap the key takeaways from today's video. We've delved into Buffett's core investment principles, including the importance of value investing, long-term thinking, and understanding the businesses you invest in. We highlighted notable case studies, such as his successful investments in Coca-Cola and Apple, which exemplify the power of patience and informed decision-making. Additionally, we discussed how to build your own investment strategy by assessing your financial goals, creating a watch list based on Buffett's criteria, and regularly reviewing your portfolio. Now that you have these insights, it's time to take action. If you found this video helpful, please consider subscribing to our channel. By doing so, you'll stay updated on our latest content, which is designed to empower you on your investment journey. Don't forget to like this video and share it with friends or family who might also benefit from learning about Buffett's investment strategies. Your engagement helps us reach more aspiring investors and fosters a community of financial literacy. We also invite you to explore related content on our channel for further learning. Whether you're interested in deep dives into specific investment strategies, market analysis, or interviews with financial experts, we have a wealth of resources to support your growth as an investor. Remember, the journey to financial success is ongoing, and the more you learn, the better equipped you'll be to make informed decisions. Thank you for joining us today. We hope you feel inspired to apply these principles and strategies in your own investment endeavors. Keep learning, stay curious, and happy investing.